Thank you very much, Mr. Chairman. Chairman Bernanke, many articles and columns have described the actions taken by the Fed in regard to the Bank of America, Merrill Lynch dealing, and other dealings of that time period as being following too big to fail policies. Would you describe your activities in that time period as in that way, and do you think there needs to be more control or a little closer oversight by the Fed and other federal regulators of the biggest banks and financial firms?
Yes, I do, to the last part. Too big to fail is not a policy. It's a major problem. We were faced on numerous occasions in the last year with large firms whose failure, like Lehman, would significantly disrupt the world financial system and the world economy. We had no good options to deal with those companies. It's extraordinarily important, as I've said for some time, that as Congress reforms the financial regulatory system, that we develop a resolution regime for resolving failing systemically critical firms, that we increase the oversight of those firms, and that we take steps to make sure that too big to fail will not be a problem in the future. So I agree very strongly with that.
And let me ask you, I've read many articles over these last few months, and I've seen all different sorts of figures as to how much money in total the Fed has loaned, pledged, paid in all the different bailouts. Would you tell us what you believe the total amount to be that the Fed has committed over these last few months?
In terms of bailouts, the amount of money we have involved in AIG and Bear Stearns is about $100 billion.
And in other actions that you've taken, I've seen figures as high as I've seen figures like 2.2 trillion. And
our balance sheet is 2.2 trillion, but more than half of that is U.S. government bonds and government guaranteed mortgage-backed securities, which have no risk and which are supporting the mortgage markets of the United States. A good portion of the remainder is short-term collateralized loans to financial institutions, which are very safe and help provide liquidity to support the financial system. So none of that is what I would characterize as a bailout, other than the monies that were involved in the AIG and Bear Stearns situations, which we got involved in with great regret, and I hope that the system will be changed so that they'll be never necessary in the future.
The Congress Daily says this morning that Fed officials purposely declined to consult with other federal financial regulators, and one email expressed concern that an SEC employee, quote, knows something is up. The Wall Street Journal reported that you and Mr. Paulson attended 2 weekly meetings of the Financial Stability Oversight Board and refused or declined to disclose the seriousness of the problems that were being faced by the Bank of America and Merrill Lynch at that time. What would you say to the majority of this Congress who has now co-sponsored the bill to require audits of the Federal Reserve? Do you feel that the Federal Reserve is operating with too much secrecy and too much refusal to disclose information that you have to other federal banking regulators?
The Federal Reserve has made enormous strides in the last year under my chairmanship to expand the information that we release. We release monthly information on all the various programs that we have. We've developed a website and a monthly report that involves all kinds of information. We think we are quite transparent. We are happy to work with Congress if they have further concerns about any of our programs. We are more than happy to work with you to make sure that you're comfortable that they are well managed and are serving a public purpose.
Do you think it would cause problems for the Fed or for the economy if that legislation was to pass?
My concern about the legislation is that if the GAO is auditing not only the operational aspects of our programs and the details of the programs, but is making judgments about our policy decisions, that would effectively be a takeover of monetary policy by the Congress, a repudiation of the independence of the Federal Reserve, which would be highly destructive to the stability of the financial system, the dollar, and our national economic situation.
Thank you.